Hey guys, Mike here again with Cashback Realty, and today we're going to give you a market update, a real estate market update for the second quarter of 2022. We're at an inflection point in the real estate market, right? Things aren't what they were 6 months ago. Things have started to change in terms of interest rates, the appreciation of available properties on the market. A lot of things are changing. Inflation's going up. So we're going to talk about what's happening now and kind of forecast what's going to happen in the next few months. So the first thing I want to discuss is this notion that there's going to be a wave of foreclosures coming in the market. That is not going to happen. Foreclosures have started to go up because the moratorium has been lifted, right? The moratorium that the federal government had on foreclosures and not allowing banks to foreclose on folks that are going through, having difficulties because of jobs, etc. That's gone. That doesn't exist anymore because, as we know, the job market's growing. There's actually not enough employees and not enough workers to fill positions that are available. So that moratorium doesn't exist anymore. So the banks have started foreclosure proceedings. However, because of the record increases in home prices, people have options now. There are alternatives for people who had issues paying their mortgage because of how much equity they've gained in their homes, right? They can refinance. They can, maybe pull equity out of the home to catch up on their mortgages, etc. I did a search on the MLS through, let me just zoom this in, Miami-Dade, Broward, Palm Beach, and St. Lucie counties for properties that are in distress or are short sales. I filtered for short sales, right? Yes. And through those 4 counties, you can see that there are only 10 matches. Maybe 2 or 3 years ago, you'd get that many in just 1 county. And a short sale is if you run into difficulty paying your mortgage, in lieu of a foreclosure, you can negotiate with the bank to sell the property at a reduced price, and they'll forgive whatever back-end balance you may have on the property. So as you can see from what's happening real life here in South Florida, and obviously the conditions may differ in your market. I'm talking about West Palm Beach, Port St. Lucie, Broward County, and Miami-Dade County. The numbers show that there aren't very many foreclosures or short sales that exist. The other major event that's happening that I'm sure everyone knows about is inflation and gas prices, not to mention the fact that interest rates are now approaching 5%. In some cases, it's over 5%. And it's important to have some perspective with regard to historical interest rates, right? I mean, historically, 5% really isn't that high, right? If you're only comparing the last 2 or 3 years, you'll say interest rates doubled. However, compared to, the early 80s and, even parts of the 90s, interest rates were close to 10%. So if you're a seller looking to capitalize on the market and what's happening now in terms of the equity gains and maybe cashing out, now is the time to do it, because you're going to find that there aren't as many buyers out there that will qualify for a $400,000 or $500,000 house as interest rates start to rise. So let's take a look at this article from Trading Economics, and it says here the annual inflation rate in the US accelerated to 8.5% in March of 2022, the highest since December of 1981, from 7.9% in February, and compared with market forecasts of 8.4%. Energy prices increased 32%, that's gas that we're talking about, right? Namely gasoline, 48%, and fuel oil, 70%, as Russia's invasion of Ukraine pushed crude oil prices higher. Also, food prices jumped 8.8%, the most since May of 1991. Also, inflation accelerated for shelter, 5% versus 4.7% in February, and new vehicles, 12.5% versus 12.4%. But ease for used cars and trucks, 35.3 versus 41.2. Excluding volatile energy and food categories, the CPI rose 6.5%, the most in 40 years, but slightly below forecast of 6.6%. Many analysts expect that March will mark the peak in inflation, although the war in Ukraine is far from over. Supply chain bottlenecks persist and consumer demand remains elevated, which is likely to weigh on the CPI for longer. And you see here are the current mortgage rates as of today. 30-year fixed 4.9 with an APR of 4.99. 15-year, you can get a little lower rate at about 4% if you go with a 15-year mortgage, right? And you can see this graph that shows what it's been doing over the past few months. The other thing I want to touch on is the homeowners insurance crisis here in Florida. It is getting ridiculous, right? My homeowners insurance dropped me. Right? I had to go out and find new homeowners insurance because of what's happening. I'm going to let you guys look at this news report so you can see what I'm talking about. If you're a homeowner, we need to do something. We need to call our Congress people. We need to make sure we stay on top of our legislators so they can do something about it, because it's one thing to have to deal with rising home prices and inflation, gas prices, interest rates going up, etc. But it's another thing completely to not be able to purchase a home because the homeowner's insurance is going up. Take a look at this article.
New tonight, I-Team investigator Jackie Calloway details a worst-case scenario for Florida homeowners.
Life support on the verge of collapse. Just some of the statements industry experts and lawmakers use to describe the state of Florida's property insurance market. What is worst case scenario for Florida homeowners if this issue is not addressed quickly?
There's a heavy storm season. I think you could see literally the collapse of the entire system.
Joe Petrelli, the president of Demotech, the company that rates the solvency of insurers, points to the recent shuttering of 3 Florida companies: Lighthouse, St. John's Insurance, and Avatar Property and Casualty Insurance Company. Others are dropping hundreds of thousands of policyholders.
That is almost 3 times as it was 2 years ago.
Homeowners who insurers did not dump them are faced with a different kind of pain: skyrocketing rate increases. Companies who continue to write business in the Sunshine State are jacking up rates as much as 111%.
And it really just makes you wonder, okay, what is going on here?
While Florida lawmakers disagree over the need for a special session to tackle reform, everyone agrees it's a lawsuit problem. Florida's insurance commissioner last month notified the governor Florida leads the country in lawsuits filed against property insurers.
We actually had 8% of all homeowners insurance claims. 8% of all homeowners insurance claims are in Florida. Yeah, Florida had 76% of all litigation.
So it is a litigation problem, and the cost is being thrust on consumers.
In March, Petrelli sounded the alarm and pressed the governor and the heads of the House and Senate to convene a special session on property insurance. Has the governor or the House Speaker responded to you?
I've not heard from any of the 3 individuals that we wrote to.
According to insurance.com, the average policy for a $300,000 home in Florida is $3,600. That's $1,300 more than the national average.
On the property insurance in particular, clearly, we have dysfunctions in that market that could be fixed.
Governor DeSantis agrees there's a problem, but has yet to exercise his legal authority to call a special session.
I think the property insurance industry in Florida has collapsed.
Senator Jeff Brandes sidestepped the governor using a state statute that allows a lawmaker to poll colleagues for a special session. Brandes garnered enough support to trigger a Department of State poll that will determine whether or not to call that session. It'll take 60% to say yes to get it done. The I-Team also conducted a poll asking more than 150 Florida House and Senate members if they would officially support a special session. We heard back from 26 of them, mostly Democrats, and all but 1 said yes.
So I want to close by addressing a question a friend of mine that I play football with asked me, which is his sister is in the market for a home, but she's back and forth about whether or not it's a good time to buy a home. She doesn't know if she should keep renting because home prices are so high. And this is what I asked him. Is she going to keep renting? Is she going to keep spending $2,500 a month, which is what she's paying, by the way, for rent? Right? That's the alternative. My point being, if you're not a homeowner right now, you should be looking to buy a house. You're not an investor at this point, so don't speculate. In other words, if you don't own a home now and you're renting, like a good friend of mine said, you're homeless. If you are renting, and I don't mean to be harsh here, but if you're renting, you are homeless. Meaning that landlord at any moment can say, you know what? I need you out of this property because I just sold it, or I'm raising the rent, or a myriad of other reasons they could give you for wanting you out of their property or raising the rent on you, etc., etc. The bottom line is, I think people, because of everything that's happening with real estate, have gotten to this point where they've become speculators, or they're saying, well, I don't want to buy now because, the market might go down again, or I don't know what's going to happen in 2 years. It doesn't matter. It does not matter what the market does, because the primary function of owning real estate is to put a roof over your head. And people have forgotten that. The primary function of owning a home is to make sure that your family has somewhere to lay their head at night. Your homestead. It's where your family is going to live. It's where you're going to feed your children. It's where they're going to grow up, etc. And I want people to get back to where they understand that that is the primary function of your primary residence. Your primary residence is not meant to be an investment first and then your homestead second. No, it's the other way around. It's your homestead first and then you look at investment. So people ask me, Mike, well, aren't you worried if the market crashes? What if you lose 30% of your value on your home? No. On my primary residence? No, I am not. And let me explain to you why. Because if the market goes up and down, which it does, by the way, real estate is cyclical. Every 8 to 12 years, the market does this, right? Every 8 to 12 years. But historically, what is real estate doing even in that 8 to 12 year time span? It's going up, right? A piece of property now is not what it was 10, 15, 20 years ago. Even though the market is cyclical, and you might lose 20% in the short term, right? In the 3 to 5 year short term where real estate is kind of doing this, guess what? Over 10 years, over 15 years, you're gaining equity. It's going up in value. So if you want to think about it from an investor mindset, from an investor standpoint, you're historically going to gain equity with real estate. If you are someone who is not a homeowner and you're renting right now, do not think about real estate as an investment. Yes, it is an investment, but my point is that you need to think about real estate first and foremost as your homestead. And after explaining it from that perspective to my buddy, he was like, you're absolutely right. Like, here she is thinking like an investor, speculating on how much value she's going to gain, what her return on investment was going to be. She needs to be thinking about acquiring a property for her and her 2 children that they feel safe, that they have somewhere that they're not worrying about whether or not a landlord's going to throw them out or whether a landlord's going to raise the rent on them. That's how, as a first-time home buyer, you need to be thinking. If you found value in this video, like, subscribe, share it with someone you think it might help. I'll see you soon.